Good morning. This is Josh Hayes with Hedge Plus, and here is the market monitor for Tuesday, August 5th. Something hopeful actually happened yesterday when the USDA inspections report came out. We saw the best week of soybean inspections in 4 months, and that's without China, with still no China sales. And it illustrates something I've been talking about all year, as though if with these trade negotiations, these trade tensions, if countries like China start buying all of their soybeans or any of their agricultural products elsewhere, it's just going to put price pressure on those places. These places can only fill so much demand. If Brazil is going to supply China with more beans and Argentina is going to supply China with more beans, they wouldn't be able to fill orders for the entire world. It would send other countries elsewhere, and that's exactly what's happening. It's not showing up in the market and prices yet, but I can promise you it'll show up at some point, probably by spring, when all these numbers are reflected and we go through the massive crops that we're producing right now. We've seen that with these export inspections, that these other countries are stepping up buying from us. It was predictable. It was obvious. It's unfortunate it wasn't talked about more. Maybe we wouldn't be dipping down so much and need to have that reality show up at the end of the year. But that is taking place right now. Our prices are very competitive. Brazil is still above us, and considerably, with soybeans and corn. We've been neck and neck with prices with Argentina. Obviously, we've gotten a lot more to potentially offer, and often a better quality, so that puts us in an advantage there. So our exports are going to remain strong. Our prices are very competitive. There's no reason to fear a loss of demand, even though I still see that talked about all the time. What is a concern and is holding things back is obviously the continued buildup and thoughts of these massive yields. StoneX put out another updated yield forecast of 181.1 for corn, and they've even also upped their yield forecast for soybeans to 53.6. Both would be massive records, and especially that corn number, that'd be quite the leap. The one positive I can say about that is if that is what the market is trading, or anything approaching 188.1 right now, I highly, highly doubt the USDA is going to jump its forecast next week to 188.1. So perhaps, even though we know we're in for a raise by the USDA of corn yield and possibly soybean yield, if the market is trading these extremely lofted numbers, then maybe perhaps the shock won't be quite so bad, if any, following that USDA report. There's even a chance that if the USDA puts in a surprisingly low number, we might rally a little bit. I wouldn't count on it, but the best way to put it is to say that perhaps the highest of yields are already being traded in. That's good because global weather continues to be favorable for crops. No real concerns anywhere, and the pattern is still good for the United States, which we'll see here in the next slide. Another 2 weeks of optimal weather in the Midwest, some heat returning, but with it is coming rain, and no issues on the 2 week forecast just about anywhere. Where rain is going to be more sporadic, it should be cooler. Basically, the rain is falling along with the heat wherever it goes. In Canada, the prairies are expected to get a little bit of beneficial rain for their wheat, especially in Saskatchewan. That is helpful there. It was one of the few minor issues anywhere in the world right now, and they're getting some help there. Harvest progress is definitely catching up. Haven't seen that in Brazil, haven't yet seen that reflected in prices. They've had a good stretch where they've been able to make a lot of progress on where they were. They had been quite a bit behind with a harvest. They're getting caught up, and they're still considerably higher in price than the U.S. That's definitely points to this shifted demand to them that they just can't manage yet. And like I said, that's sending other countries to the United States that we typically don't sell to, or certainly don't sell to in the volume we've been selling to thus far. In the EU, southwestern countries are seeing some heat rising. I believe the hardest hit country there is Spain. But again, no real concerns for weather anywhere in the world right now, and that is definitely why part of why between that and massive yield forecasts rising, production forecasts still rising in South America, that is why we have so much pressure on prices in the markets right now. But again, I gotta reassure people, good things are happening in the background. Strong sales are being made. The demand is there. We're going to work through this massive crop, and if the massive crop ends up being not so massive, we'll have a considerable rally. And if it is massive, we're going to work through the inventory. So we'll be in a good place in spring. I believe so, no matter what. Finally, taking a look at the overnight prices, pretty mixed. We did fall through the contract low with corn yesterday, which had been 407 and a half. We settled at 407. That was a pretty significant factor. We'll see what happens in the open today, but on the overnight, we continue to drift down lower. Now trading around 405. Going back to last Thursday, so 3 trading days ago, corn is down about 7 since that last update. Soybeans are up about 1, and wheat is down about 9. Do anticipate that we'll continue to drift down. Perhaps we won't have a massive shock on next Tuesday's U.S. Day report, but as far as perhaps avoiding another major drop, we probably will likely continue to drift down. That's the way we have people positioned in the hedge accounts, and that's how we think things will continue to be throughout this month. That's all for today. Tomorrow we will have our weekly Q&A released. That is the Grain Gauntlet, 5 questions from you guys that Patrick and I answer. That'll be tomorrow. Other than that, I will talk to you again on Thursday.